Hello, friends. So, in the month of June, we have seen market scaling to new high, and this has happened mainly because our economy has been doing quite well. If you look at from the growth parameters, we are one of the fastest growing economy with a very reasonable rate of inflation, uh, and it continues to exhibit profit promise. If you look at in terms of the um, high frequency data coming out from the growth parameters, it is all showing a decent amount of growth. And this has been matched by the foreign portfolio flows, which have found India as an attractive destination. And so we have seen market scaling new high. While the fundamentals remain strong, at the current juncture, if you look at the uh, indices like Nifty with 23 times roughly trailing P and 19 times 1 year forward P, I think they are reasonably placed. But yes, there are certain risks which can emerge. Firstly, from the monsoon. If the monsoon is not good, we may see some amount of inflation and the probably a rate action or the slower growth, which could impact the markets. Or if the global recession comes faster than expected, then it would impact the external growth and could impact our markets. As of now, these risks are quite low, and that's how, if you look at from the positive side of the markets, the biggest positive in the market can come from the market's expectations about the outcome of the 24 general election. Right now, market believes that it will be a strong government again, and that's why they are not. That's the way they are discounting it right now. But if that changes, obviously that will have impact. Second is the earnings, which is most important. If you look at the earnings growth has been decent, especially since last quarter. We have seen some green shoots in the margins expansion, and I think those that recovery should sustain, and that should help markets to remain well placed, especially if we compare amongst the market caps. So the small cap looks more reasonably placed compared to large cap and mid caps, mainly because of the the underperformance which it has seen for last 1 year. And if this expansion in margin continues, obviously that will support a broader market, and in which the small caps fits relatively better, though the market remains quite broad based. Lastly, one of the risks which could come is from the interest rates. If especially if the Fed increases the rates by another 50 basis point, which it has been saying, I think that could disturb the equity market, not so the bond market, because I think if you look at Indian bond market, is quite reasonably placed with 10-year trading around 710, range. I think there's a positive spread there versus the global markets. So even if the India is pushed to hike the rate to support the currency, I think the net impact on the bond yields will not be very high from here. So if you look at from the long-term perspective, the bonds are really priced well, and one could look at a longer duration exposure at this juncture. Otherwise, I think overall construct of the market is quite well placed in terms of valuation, in terms of flows, in terms of other macroeconomic fundamentals. And let's see how the earning seasons pan out, and then we will take a call from here. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.